Welcome to Customized Trading's webinar series. This one covers time segmented volume normalized, which is second only to price action in importance. Trading is an exciting career, an exciting way to make money, but it takes having the proper tools to get the job done. Otherwise, you're actually making it much more difficult to do the job that you want to do. So let's take a look at how important volume is to your trading activities. Now, here's a very typical volume indicator. And very typically we see that there's a lot of volume at the beginning of the day. You get into the lunchtime hours and it's very low volume. And then you see a rush of volume at the end of the day. That's very typical. And depending upon the time chart you have, of course, the number of shares that are being traded on each one of those bars is different. According to the symbol, it's different. It can be hard for traders to read because there's so much variety and difference, and you have these distortions of time where you have a large volume here, almost no volume, and large volume here that typically distorts the common stock volume. So if it's so important, you got to have the tools to help you read it. Now, we have two tools that make that job happen. One is the volume normalized, where you read this indicator the same whether it be on stocks, Forex, or futures. And yes, I did say Forex. You can actually get these indicators to show you volume on Forex. Now, this dotted gray line is the 100%. So we standardize all volume to 100% and then show you each bar in relationship to that. So if you put your cursor on a bar like that one, that's 224%. See the second one from the bottom? It says the volume percentage, volume normalized. The 100% is the reference line. You go back a couple, that happens to be 93%. So you read it the same all the time. The other key aspect is time segmented volume normalized. Now you can see that this indicator still tends to show that profile of, this obviously because it's volume, the profile of the big amount of volume at the beginning of the day, the very little volume in the middle of the day, and the spike of volume at the end of the day. But the exciting thing is the time segmented volume does not, because it's not comparing one bar to prior bars to give you an average. It's actually only comparing that bar, like for example, this bar is the 935 bar. It's only looking at past bars that happened at 935. So you're getting a true reading of volume compared to the same time all the previous trading days. That's what time segmented volume is all about. Now you get to look below this and see, oh, we had a very low volume in General Electric on the open of that day. There was like nothing there until we had kind of a blow-off volume. we had kind of a change in direction from the upward move to the short volume that occurred here with a big volume spike being 122% of normal volume for that time, specifically being 11:25. Then it kind of went back into low volume, and as it went sideways and gradually drifting down because this changed the direction. It was enough force on the gas pedal to change the direction, and it started gradually working its way down over time. And you can see that we really didn't have much volume for the rest of the day. Now if we come forward in time to just this past Friday, you can see that again the typical volume, huge volume, very low, huge volume. Well, now we see a completely different pattern. We see that, oh, our time segmented volume normalized confirms it as well. Yes, indeed, we had a lot of downward volume here. Okay, there was a little bit of a pullback, but with that much downward volume, it still had the momentum to continue down for another push later in the day. And we had a big volume down on that last push of the day. Then the volume started dropping off as it just started working its way up a little bit of a retracement from this big down move that occurred at the end of the day and then into the day until lunchtime. So time segmented volume normalized is a huge asset for the trader and the way to look through the distortions of volume. Now let's look at it on the E-mini E-mini S&P 500. In this case, we're looking at the actual normal trading times, and we're looking at the 24-hour times. Now the volume normalized shows the story that most of the volume happens, at the beginning of the day here, and it tapers off, with almost no volume happening overnight in the overnight market. Now the time segmented volume, not normalized, just time segmented volume, it shows the normal pattern for a day. So this is the norm, the yellow line. And then this becomes the reference pattern for volume in reference to that. So you can see overall it was lower volume except for right in this area and in this move here where we had some increased volume. Then we had an increased spike on this one. So this is a very interesting tool as well. But then you have the time segmented volume normalized where it's all referenced to the 100% here. Now you notice that this shows a real big volume spike at the end of the day. We had a 258% and a 283% of normal volume here. Now, one thing that's interesting about this second one, these are both divergence because the first one is up volume and yet it was a down bar for the opening bar. The second one was also a powerful up bar and it was 283% of normal. You would expect to see a big bar more like this. And in reality, not only do we not see a big bar, we actually saw a very small doji. That tells us that this does not have legs. This does not have the power to continue that up move. And sure enough, it didn't. In fact, it went sideways during this, normal off hours. It went sideways for a great deal of consolidation. Now, when it finally did move, it moved to the upside, but it was a long ways down the road. But this is a good consolidation breakout. So you could have had a very good consolidation breakout. You can see the volume starting to pick up here, and more times than not it's positive volume. The bigger volumes are positive, so the market's wanting to move to the upside, and indeed it did have a nice upside move. So time segmented, volume normalized, time segmented volume, and volume normalized are all the key aspects to this second piece of trading. The most important thing next to price action. Thank you for joining us on this webinar. Make sure to tune in to the various series that we have. You can do a search for customized trading, come to our website, or search for other webinars that we put out on the internet for people to learn about stock trading, forex trading, and futures trading. Thank you.